All right, hi everyone. Thanks for joining us this morning. My name is Ryan Graves with Visible's marketing team, and I will be your meeting host for today. I'd like to welcome you all to our webcast on the strategic financial services approach to social media. Before we get started, I just want to cover a few housekeeping details, and then I'll go ahead and introduce our presenter. The first is that the phone lines will be muted during the presentation, so if you need to communicate with me throughout, please use the chat function in the WebEx control panel on the side. And at the end of the presentation, we'll take as many questions as time allows, and you can submit those also in the control panel in the Q&A tab. Our presenter today is Omri Duek, who is a product marketing manager here at Visible, a leader in our enterprise social intelligence solutions. And formerly, Omri was of Symphony, where he was an insight practice leader before it was acquired by Visible, where he led a team of business analysts focused on social media consulting for the Global 2000. And with that, I would just like to pass it off to Omri.
Thanks, Ryan. Hi, everyone. This is Omri Duek speaking. And we're here today to talk about getting to wisdom and specifically focus on financial services applications. So just to give you a sense of what we're going to be walking through today, there's a little bit of material here. I'm going to give you a quick analyst disclaimer as a former analyst myself and just introduce the tool that we're talking about. But then we're going to spend most of our time talking about what wisdom is, how we get to wisdom using social media intelligence and social media analytics. And as part of that, I'll present both a framework as well as an example. And then finally, we'll take a look at one application of this framework that I kindly call the focus group technique, which especially in financial services we find helps us get through many of the challenges that we run into given some of the noise that's out there in social media today. So a quick disclaimer as a former analyst myself, what you're about to see in some of the data that I'm going to present is actually from a sample data set. It is not the full fire hose of Twitter. I just grabbed a quick sample to show you guys some ideas. But that said, we are looking at quite a large volume of posts, roughly 100 million posts a month, or actually more than that if you take a look at the graph on your screen right now. So just a quick introduction to Visible. For those of you that aren't familiar with us, or those of you that are already working with us, we consider ourselves the hub of enterprise social media intelligence. So what that means is that all of the use cases that you see around the Visible circle here, we really address with our Visible Intelligence enterprise platform. And really the key tenets of that platform are that we have global authoritative content, that we have extensive search capabilities and segmentation capabilities, that we provide engagement and social CRM natively in our tool. And beyond that, we really focus on the analytics and the actionable insights. And today we're actually going to take that to a whole new level and talk about getting to wisdom from insights that you've generated. So that's my one marketing slide for you, and now we can move on to some of the more interesting material here. So getting to wisdom, you know, we've been looking at this space for quite a while. What you're about to see is based on the work of two companies over 5 years with extensive experience in the financial services space. And that ranges everywhere from retail banking and insurance to asset management, wealth management, et cetera. And our work has really focused on everything from longitudinal brand tracking to customer search, as well as alignment with third-party data sources, whether those are survey and focus group-based data sources or digital data sources like web analytics. And I'll encourage you at the end of this presentation to get in touch with us if you're struggling through some of those challenges or issues today. So very quickly, how do we think about getting to wisdom at Visible? And really, what is wisdom here? And so we really think of it as the fourth step in a set of four, starting with intelligence and starting with data and metrics. So before we can really do any kind of analysis, we need to know how many posts. We need to ingest and index those posts to make them available. And you'll find that most vendors in the space today actually give you this capability. But it's all about the quality and the breadth of that content, and ultimately, that's why we feel as intelligence is so important. The next step down, analytics, is really about segmentations. So now we know how many posts there are in social media, but now we need to start understanding where are those posts coming from, who is writing them, what is the sentiment of those posts, and what are the primary topics, audiences, and behaviors that those posts comprise. So are those posts about credit card and checking fees, or are they about 401k and other asset management type fees? Those are critical segmentations in order to support the different stakeholders in our businesses. And more importantly, looking at issues like audiences, are we listening to our key audiences on the wealth management side, say investors, and on the retail banking side, more mainstream customers, or are we listening to all of the noise in social media, which can often include many other characters? Once we have our data and our metrics, once we're able to segment those by sites, topics, and audiences, as analysts, we looked at the team that was working on the data, and what we realized was they really take one approach to finding insights that are actionable. And we call this the Heaps and Outliers approach. And certainly there are other approaches out there, but we found that the analysts that were really successful in our organization working with social media were really looking for those themes and measures across segmentations, which were consistent, so the heaps in the data, and the themes and measures across segmentations that were outliers. And what we found was that often those outliers indicated to us novel insights that we were able to pass along to our clients. So how do we get to wisdom? How do we get to this idea of predictive models, of being able to say, what reactions do we expect next time on a more qualitative level? How should we prepare or respond next time? Again, at somewhat of a qualitative level. Or for those of you that are starting statistical modeling experiments, how do the 3 levels of intelligence, analytics, and insights really get you to be able to deliver a model that correlates well and works within your business, whether you're doing market mix modeling or some kind of trading? So moving forward, just looking at this generic framework, when we begin any project, we really start by focusing on the content universe and the data filters. So thinking about the framework that I presented on the last slide, that really encompasses the intelligence that we have, what is our content universe, and then how we're going to be able to slice and dice by that content universe. And that comprises our second level of analytics. So what does this look like within a retail banking model? Well, one content universe that you can create is based on the branded universe. So tracking all mentions of the Big Four, of regional banks, of community banks and credit unions, as well as banks across the border in Canada, Europe, and Asia Pacific. And in doing so, we have a defined content universe, and that way we know that our accuracy in any future segmentations, insights, or models are going to be maintained and consistent. And so that is absolutely critical. Below that content universe, what you see are the various data filters that we might apply to this content. And as I mentioned before, those may include basic segmentations like sentiment or media channel, breaking things up into positive or negative posts, breaking things up between Twitter and Facebook and blogs and forums, because you can't compare apples to apples when you're mixing those channels. But in addition to those basic segmentations, we want to start looking at product, audience, and behavioral segmentations. So on the product side, in this case focusing on retail banking, being able to segment our data by products such as checking, savings, CDs. On the wealth management or asset management side, perhaps we're segmenting by bonds, stocks, annuities, or perhaps even terms like 401k. And as far as audiences are concerned, on the retail banking side, we may want to look at investors versus moms versus students or business travelers. And again, these audiences may vary depending on our needs. Again, looking at more of the asset management or insurance world, we may be more interested in what the industry analysts are saying or what some of our high-profile investors are saying. And finally, we want to be able to segment by behaviors. So really being able to hone in on posts by consumers where they're talking about opening and closing accounts or advocating our brands and our products. Those are the sorts of data filters that allow us to go from intelligence to that second level of analytics. And of course, we want to be able to do custom segmentations on the fly as well to pick up key topics like WikiLeaks or bailouts or Occupy Wall Street or mobile banking. And so with this framework in mind, we've now satisfied the intelligence and analytics tiers of our framework for getting to wisdom. And the key is that by layering these pre-made and custom analytics filters against our content universe, by looking for those heaps and outliers that I mentioned before, that's how we're going to start extracting focused insights. And so what does that actually look like? Well, to start, let's just take a look at some segmentations. So actually, the first segmentation I have here is already based on brand and based on topic. So in this case, I've limited my content universe to the Big Four, and I've limited my content universe to the universe of fees. And by the way, for those of you on the phone, I'm referring to the Big Four in the retail banking context, so I'm talking about Bank of America, Citibank, Chase, and Wells Fargo. And we will delve into some asset management and wealth management topics in the second half of this presentation. So coming back to this slide, we see that we're already creating one segmentation by selecting certain brands and focusing on fee-based posts. But you'll see that I've created 3 other segmentations as well. My first segment is one by audience. I want to see how moms specifically are responding to Big Four fees. My second segmentation is one of sentiment. I'm segmenting those mom posts about Big Four fees into positive, negative, and neutral posts. Not because I'm necessarily going to dig into each bucket, but to give me a quantitative sense of the attitudes towards Big Four fees. And finally, my third segment is again going to be one around topic, to really allow me to understand how do moms discussing Big Four fees, which topics are they discussing in the highest numbers? And in the example that I'm showing here, and I should mention this data was taken from approximately September, October 2011, we see that fees, within fee discussion, debit cards, ATMs, and checking are some of the most prominent topics. And so here's one way of starting with our intelligence, with our data and metrics, starting to segment it using analytics, using data filters. And the next thing we're going to do is we're going to look at these segmentations next to each other and look for the heaps and outliers. So now what I've done in this slide is I've replicated the same process that we've taken for moms, and I've simply replicated it for travel sites such as flyertalk.com, where we know we have slightly more affluent consumers speaking, mainly business travelers, mainly talking about credit cards, as we can see from the topics. And I've also replicated this for another group, which I call the auto enthusiasts. So these are the people that are posting on sites like Camaro 5, Beamer forums, et cetera, et cetera. Now, this audience-based segmentation where I'm using sites alone is one approach that gives us a high degree of recall. But later in the presentation, I'll show you an approach that really allows you to hone in on specific attributes that you're interested in capturing. But what we're really seeing here, and now looking at these different segmentations against each other, is that we can start to see some very interesting heaps and outliers. So as I mentioned, this data is from October 2011. And starting with the heaps, what we notice is that auto enthusiasts or moms are both talking about debit cards within fee conversation more than any other topic. Now, for those of you that know what happened in the retail banking space in September, October 2011, we had the addition of many new fees, monthly fees from many of the Big Four. We had Occupy Wall Street going on. And perhaps most importantly, we had Bank of America introduce and then later withdraw their debit card fee. And what's interesting and insightful from this view is that we see that while auto enthusiasts and moms were talking about fees, and we're talking about debit cards and other checking-related terms, when we look at our business travelers on travel sites, we see that not only are they more positive in general, we see that their top topics are about credit cards and loyalty rewards. And digging into those conversations, we find that while these other two groups were discussing Bank of America's debit card fee and how frustrated they were, we see topics like I do not recommend bubbling up, those behavioral topics, topics like switching banks bubbling up within auto and moms. Again, behavioral topics that show some of that negativity. When we look at travel sites, we have a high degree of positivity, and we have comments about loyalty rewards, quite a positive topic. So again, by looking at the heaps and outliers across these groups, we can start to identify insightful segments of data. And no longer do we need to look at 5 million posts, but we've really honed in on the 100 or 200 posts that warrant a key analyst's attention. So now we've moved from intelligence, we've moved to analytics and segmentations, and now we've moved to development of insights by looking at those segmentations next to each other and the heaps and outliers they create. So how do we move to wisdom? How do we move to this idea of more predictive reasoning? And on the next slide, I'm showing you some work that we did, as I said, towards the end of 2011. Again, continuing on this work of the Big Four fees. And in digging into the data that we just showed you, and specifically into the heaps of people that were complaining about the Big Four banks, we started to notice that there was a trend around community bank and credit union advocacy. And I should say at this point of the game, here we are in 2012, I think many of us know how this story rolled out. But we were able to get at this information just a week after the Bank of America debit fee came out and consumers went online and started discussing their options. And what we found was that there was a tremendous amount of credit union advocacy. And we used our segmentations. We used our segmentations for the Big Four, our segmentations for community banks, and our segmentations for discussion of fees to start to see how these mentions correlated against each other. And as you can see in the visual that I'm displaying now, we found a fairly linear relationship between discussion of the Big Four and discussion of community banks when fees were part of that discussion. And what this represents when we start to look at the data qualitatively and really dig into this is that we find that consumers were going online to talk about these new debit fees and often recent monthly fees that were also introduced. And as a result, community bank and credit union advocates came in droves and responded to each of those comments and said, hey, you should really try a community bank. We encourage you to switch. They have no fees. And as we know today, that is indeed what occurred, and we saw many of the Big Four start to position against the community bank and credit union threat shortly after that. So the model that I've just showed you really speaks to how to go from intelligence, from that data and that content, break that up into segmented data and content by topics, audiences, and behaviors. Start to look at those heaps and outliers between those segmentations to develop insights. And once you've developed insights, cataloging those insights, such as community bank mentions, and the relationship of Big Four and community bank and fee discussion, and start to generate wisdom. And our advice to the companies that we worked with when we did this research was to say, if you're a Big Four bank, you need to position against this threat. And moving forward, you should know that when you launch new fees, these consumer advocates for credit unions may be out there. And to the credit unions, we gave similar advice, but almost the opposite. And we said, this is the reaction that you're seeing when Big Four banks announce new fees. Here is an opportunity for you to take advantage of the social media zeitgeist if a new fee were to be announced and some discussion were to occur. And we were able to show this in a very unique way. So this works quite well for the retail banking space. Certainly there's a lot of posts out there. But as many of us know, retail banking is not the only stakeholder group in our organization, and certainly not the only pillar within financial services that is looking at using social media. And there are a number of techniques that can be used to get at more granular data. And so in this next section, I'd like to present just one technique of many that we use internally, first of all, to deliver a high ROI for our clients, but also to delve into even more focused and even more granular insights. And so this section really starts to deal with what are the specific challenges in financial services research. And as I've mentioned throughout this presentation, many of them have to do with granularity. And specifically, we see a need for a high degree of granularity around audiences and topics. And specifically around audiences, we see a large amount of noise out there, by consumers that may not necessarily be relevant to all of our stakeholders. Ultimately, the asset management group, except for perhaps Justin Bieber himself, they do not care about many of the people that talk about Justin Bieber. The people that they care about are the investors, the high-income consumers, and those that are making trades or investments with over 100 or 250K at a time. And so being able to filter out that noise for the appropriate stakeholders, being able to look at those appropriate audiences for retail banking, asset management, insurance, wealth management, as well as various B2B areas within financial services is absolutely critical. And secondly, the need that we see is to have a fine degree of topic granularity. And within the retail banking side, we often see thousands and thousands of mentions of sponsored venues. Here in the Boston area, we have the Bank of America Pavilion, we have the TD Garden, and the Comcast Center. And every time visitors come to these sponsored venues, they often tweet about them. Now, this is absolutely great from a PR brand awareness standpoint. But as researchers, those are not necessarily posts that are going to drive insights for us, and certainly we're not going to make our VPs or analysts wade through thousands of Foursquare check-ins in order to get to that one nugget of insight. And so this idea of being able to segment by topic, first of all, to exclude irrelevant topics like sponsored venues or coupons or spammers, but also being able to include important topics like asset management or high-income trades. Those are the sorts of things that we need to be able to do, specifically in financial services research. Now, I should also add that another hot topic in financial services recently is all about compliance. We're seeing a lot of movement in that space, and I think that really deserves a totally separate webinar, and we're hoping to follow up on that one as well. But one technique that we've found works extremely well to hone in on these audiences and topics is this concept of the social media focus group. And the way we construct the social media focus group here at Visible is we start by curating a focus group online based on desirable factors. So we do this within our tool, sometimes including using just the web browsing and digging in a little bit into specific forums and sites, but largely within the Visible Intelligence tool. And we look at demographic and psychographic profiles of various individuals we find to see if they fit the factors that we're looking for. We look at influence rankings and clout, which are available natively within the VI tool to understand who the most influential people are. And we start to break down people by how many times they mention brands, competitors, our category, whether that's financial services in general or a particular pillar within financial services, or even specific topics, say mentions of mobile banking, mentions of a specific campaign, mentions of 401k. And really, it's not about creation, it's about curation. And in the social media space, we feel that you're going to hear a lot more about curation around the next few years, which really implies getting beyond the noise and focusing on the people, topics, and brands that you're interested in. So once our teams curates these groups, we create these segmentations in the VI platform. So now we're able to use them and leverage them against the rest of our content universe. We're able to look at how our focus groups are discussing topics like 401ks, or annuities, or taxes, or even topics that are somewhat outside our industry, like how they speak about the Olympics or the coming election. And the beauty of this model is that it scales incredibly well. So we can create a focus group for specific business lines, retail banking, wealth management, insurance segments. We can create focus groups to track specific audiences, such as investors, moms, or those of us that do a lot of recruiting in particular. We can track students. We can create focus groups for PR, analyst relations, or investor relations, where we're looking on high-reach publications or journalists, or where we're looking for key analysts in this space. And so we can create hundreds of these focus groups as necessary to have the segmentations that we need based on very specific profiles, influence rankings, and mentions of our brand or specific topics to start to look at. So what does this look like in practice? So I actually did this over the course of the past week, and I decided to create a focus group of my own. And specifically, I wanted to focus on the topic of retirement. And so I started digging around within our VI platform. I realized that one of the key sites discussing retirement is Morningside.com, a really fantastic forum, and I started sorting by clout scores and influence scores, and I uncovered a few interesting participants that I wanted to track. And going to Morningside.com, which was one click away from the VI tool, I was actually able to pull up this profile for this one user that I was interested in named Dragon Pat. And as you can see from the details that this person listed on the site, this person is a research scientist at 3M. They've been working there for 32 years. And based on the language that they're using in their biography, they're pretty seasoned investors. They're talking about having held the stock required, selling it, diversifying into funds, stocks, and ETFs. Now they're even helping their daughter with their 401k and Roth IRA. And we can see some of their interests: Roman and Greek archaeology, gardening, beading, cats, and vacationing in Italy. Quite a life. But of course, now we have a very good sense of who it is that we're seeing. And within the VI platform, towards the bottom of this slide, you can see that we were able to create a tag cloud of the post by this user, Dragon Pat. So we're able to tell what are some of the topics that they're discussing: portfolios and funds, specifically maybe taxable or non-taxable funds, discussing 401ks and Roth IRAs as well as ETFs. And we can also track their volume over time. And what I find interesting about this is that this particular participant, their volume seems to drop off in April, right around tax season. You could certainly dig in and find out if there's a reason for that. And certainly, you could start to apply other segmentations to this user to see how they're specifically talking about 401ks or Roth IRAs, or what comes up when they talk about opening or closing accounts or switching providers. And so we don't do this for just one participant, but we start to identify other participants that we want to lump into our little focus group that deals with retirement. And I've selected two other participants for this particular focus group. Our first participant, or our second participant, Yogi Bear Bull, also includes a lot of language talking about serious investing, having tried various approaches since the 1970s. They're now using a balanced core and explore approach. This person talks about pre-retirement and post-retirement, and we know that they're a retired professor emeritus of engineering. And looking at the tag cloud that we can create around this user, we see that they're talking about TIAA-CREF, they're talking about Morningstar ratings, they're talking about allocations, and they're talking about various equities as well. Our final user in this particular group, retired at 48. This particular user likes to summer in Saratoga Springs, New York, and I'll leave it to you to read some of the other details in the biography. Again, we can start to create tag clouds around these specific users and see how their discussion changes over time. But the key is that we've really curated our content set to focus on specific users that are going to satisfy particular stakeholders. In this case, stakeholders that are particularly interested in retirement conversations. And so how does this all come together? We can start to create a segmentation around our entire focus group that we created. And in doing so, we now have a segmentation that we can bring back to our stakeholders looking at retirement and say, you don't need to wade through 5 million posts anymore. We've been able to isolate for you the key users and the key posts that you need to understand how people are discussing some of our products, some of the brands out there, some of the campaigns going on online. And as you look at the 3 posts that I pulled up from our influencers that we've chosen, you can see that they're very, very detailed and very, very in-depth, talking about very specific issues with regards to ETFs, with regard to mutual funds, and they're even making recommendations to other users on this site. So they're actually influencing the decisions of the rest of the community, and we have the ability to look at those users and understand how they're reacting to our outreach. So what's the ROI of this? And this is really our last slide here before we kind of cut it off and go to questions. With a few caveats, social media focus groups really provide a fantastic ROI, not as replacement for traditional focus groups, but really to complement traditional media program or traditional focus group programs. So my background is in research. I used to do quite a number of surveys and focus groups, and you know, these are actually, I would say, floor prices depending on who you're looking to get in a room. But typically, you're paying about $4,000 to $6,000 per session, and you're paying individuals about $100 to show up and for their time. Now, think about some of the individuals that we were able to isolate online. We were able to find real high-profile investors that are influencing communities online, that are potentially distributed across the country or the world even. And these folks really met some key criteria that we wanted, like discussing retirement, like knowing quite a bit about financial markets. And so I would actually argue that it would cost you a lot more than $10,000 to $14,000 per focus group to get these people in a room. And so the beauty of the social media focus group is that you have unlimited sessions that you can conduct, unlimited participants that you can include. There's no payout, and this is something you can do within the VI platform that if you don't already have, we can certainly speak to you about as well. And so certainly there are many reasons to invest in social media monitoring. And by bolstering some of your existing research methods, by adding social media focus groups as one technique among many that we can share with you, you can actually save quite a bit of money on the research side for more important matters and really come up with some interesting insights. So thank you very much for joining us today. Please feel free to reach us if you're interested in this technique, if you're interested in our platform and how we went through this process, as well as some of the other techniques that we have for getting to wisdom within financial services. Thank you.
All right, thanks, Omri. So I just wanted to mention to everybody really quickly, again, if you need to ask any questions, which we have some time to address right now, feel free to type those into the Q&A panel in your WebEx control panel on the side. As far as the recording of today's webcast, I will make sure to send that out to you guys later this week, and included in that follow-up email will be a link to a recent white paper we had put together as well on a similar topic regarding getting to wisdom in financial services. I don't know if many of you maybe have had a chance to read that, but if not, I will send that out as well. Omri, we do have a couple questions coming in. First one is regarding some of the segmentation you did around the Heaps and Outliers and how the data was collected. For instance, when segmenting for moms in the data for that, was it a collection of all Big Four banks together, or how was that put together?
Sure. So the process that we take, again, begins with understanding our content universe before we start speaking about segmentations. So in this case, we really began by looking for all branded mentions of various banks. If you recall that retail banking framework slide I have, we were looking at over 40 different brands online. And so we were really limited to mentions about those brands. And then we were segmenting that data by looking specifically at mom sites like Baby Center, The Bump, The Knot, and Cafe Mom, et cetera, et cetera. Now, that doesn't mean that that's the approach that you necessarily need to take. Perhaps you want to take a broader approach and focus on unbranded terms such as checking, savings, et cetera, that are more important than brand mentions themselves. But really, we really take that on a case-by-case basis depending on what the client is looking to do.
Thanks. And I think you discussed this a little bit when you were talking about kind of segmenting the data, but are we able to filter further down to see posts and conversation around these topics individually by company and filter out some of the discussion about other brands?
So I hope I understand the question correctly. You can certainly start to hone in on specific brand mentions, specific product mentions. Just to clarify, if you're looking to understand the specific companies that people work for, that is not what I'm referring to. But certainly when you create these focus groups that I discussed today, you can start to drill into any of the various segmentations that we described, whether that's by brand, by product, by behavior, et cetera, et cetera.
Yeah, absolutely. Thank you. That was correct. And then last one is about sort of privacy and how we deal with that in terms of data collection.
Yep. So of course, we have to respect all privacy regulations. You know, we are certainly in constant conversation with our data providers about various user expectations. As you can see, number one, I did not provide any names in some of the profiles that we have here. But what I will say is that all of the information that was presented today is publicly available. If you dig deep enough into Google, I promise you, you will find it there. And many of those, I should say, were also screenshots, specifically those bios, were screenshots directly from Morningside.com. That biographic information is not something that we actually ingest, again, for privacy reasons.
Great. It looks like we're a little bit over time. If we have any more questions come in that we're unable to address now, I'll make sure to get those to the appropriate people and have everyone followed up with. Thank you to all of you for attending today. And as Omri mentioned, if you have any other questions about the presentation today or the focus group method we use or any other techniques, feel free to reach out to us at any time and we will get back to you. Thanks, everyone, and have a good day.